Good morning, afternoon, and evening to traders around the globe. I'm Eric from Alpha Market Meridian for today's intraday currency focus, bringing a deeper pullback. To the upside, our near-term resistance is at 0.7200, a level that's been tested twice already today, with the pair failing to break above it on the first two attempts. If we can break and hold above 0.7200, the next major resistance comes in at 0.7220, which could open the door for further gains. Now, let's turn to the actionable entry setups, 2 bullish, 1 bearish, and break them down step by step, so you can decide which fits your trading style. Point 1. Bullish setup 1, safe dip buy, high probability. This is the setup we are prioritizing today, especially for conservative traders. The idea here is to buy the dip at the key support zone, where we expect bullish momentum to kick in. Let's break down the details. Entry zone, 0.7150 to 0.7162. We want to enter in this range because it's right at our primary support level. But here's the key. Don't just jump in when the price hits 0.7150. Wait for confirmation. What does confirmation look like? A bullish rejection candle, something like a pin bar with a long lower wick, or a bullish engulfing pattern. That tells us that sellers tried to push the price lower, but buyers stepped in and took control. Stop loss, 0.7118. We are placing this just below the secondary support level of 0.7120, to limit our losses if the support breaks. This is a tight stop, but it's necessary to avoid getting caught in a deeper pullback if the bullish setup fails. Take profits. We're using a 3-target approach here to lock in gains at different levels. Take profit 1 is 0.7195. That's a quick intraday scalp, perfect for traders who want to lock in small gains. Take profit 2 is 0.7218, which is just below the major resistance at 0.7220. Take profit 3 is 0.7245, an extended target for traders who are willing to hold a bit longer if momentum picks up. Point 2. Bullish setup 2. Breakout aggressive long for more aggressive traders, we have a breakout setup. This is for those who want to capitalize on a break above the near-term resistance, which would signal a shift to stronger bullish momentum. Here's how it works. Entry. A market buy when the price closes above 0.7202. We're using 0.7202 instead of 0.7200 to avoid false breakouts. We want a confirmed close above the resistance level, not just a quick spike. That confirmation ensures that the breakout is legitimate, not just a temporary blip. Stop loss, 0.7168. This is placed just below the current price range, at a level that would invalidate the breakout. If the price falls back below 0.7168, it means the breakout failed, and we exit to limit losses. Take profits. Take profit 1 is 0.7220, the major resistance level. Take profit 2 is 0.7250, an extended target if the breakout gains momentum and breaks through 0.7220.3. Bearish setup. Resistance rejection short, counter trade only. Now, this is a counter trade, meaning it's only for traders who are comfortable going against the mild bullish bias we are seeing today. We only recommend this setup if we see clear rejection at the resistance level. Here's the breakdown. Entry zone, 0.7195 to 0.7215. This is the resistance zone we've been watching. If the price hits this range and shows clear bearish rejection, like a bearish pin bar or a bearish engulfing candle, that's our entry signal. Stop loss, 0.7232. This is placed above the major resistance at 0.7220 to cover any false rejection signals. If the price breaks above 0.7232, the bearish setup is invalid, and we exit. Take profits. Take profit 1 is 0.7160, which is just above the primary support. Take profit 2 is 0.7130. near the secondary support. Take profit 3 is 0.7105, an extended target if the support breaks and the bearish momentum continues. Risk and money management, non-negotiable. Before we move on, let's talk about risk management. This is the most important part of any trading plan, and we never skip it here. First, max risk per trade. 1% of your trading capital. That means if you have $10,000 in your account, you should only risk $100 per trade. This keeps you in the game even if a few setups fail. Lot sizing guide. For small accounts, under $5,000, stick to 0.01 to 0.03 lots. For mid-sized accounts, $5,000 to $20,000, 0.05 to 0.10 lots is appropriate. And remember, avoid mid-range entries between 0.7170 and 0.7188. There's no edge there, and you're just taking unnecessary risk. Trigger rules, critical for success. Let's recap the trigger rules to make sure you enter the trades correctly. First, only enter on candle confirmation, pin bars, engulfing patterns, or rejection wicks. No guessing, no jumping in early. Second, if the price holds above 0.7150 all day, prioritize the bullish setups and avoid the bearish countertrade. Third, if the price breaks and closes below 0.7148, abandon the bullish bias entirely and focus on the bearish setup instead. One more thing. Market conditions can change quickly. Keep an eye on US economic data releases today. Any unexpected numbers can move the US dollar, which will directly impact Australian dollar to US dollar. We don't have any major US data due this afternoon, but always stay alert for news that could shift the market. That wraps up our Australian dollar to US dollar intraday trading entry strategy for April 29, 2026. To recap, we have two bullish setups, the safe dip buy at 0.7150 to 0.7162 and the aggressive breakout above 0.7202, and one bearish countertrade at 0.7195 to 0.7215, all with clear stop losses and take profits. Remember, trading is about probability, not certainty. No setup is guaranteed, but following these rules and managing your risk will give you the best chance of success. Thank you for joining us today. Whether you're a new trader or a seasoned pro, we hope this analysis helps you make informed trading decisions. Tune in tomorrow for our next intraday currency focus. And as always, trade smart, manage your risk, and we'll see you in the markets.